We detected an unusual trade worth $63 million on Tesla stock, ticker symbol TSLA. So in this video, we'll break down this unusual option activity to figure out whether this wealthy investor is going bullish and buying, expecting the stock to move higher, or bearish and selling, expecting it to drop lower. Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, giving them an edge to make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, to level the playing field, let's dive into the unusual option activity to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. This is not just theory. Our analysis has already delivered real results, even on Tesla stock. For example, if you've been following our work, you would know that we entered bullish trades when the stock was trading around $250 per share, near its year-to-date lows, because we detected unusual option activity on this day, April 23rd. Here's the video we posted on our channel back then, sharing our analysis and trade, which turned out very profitable because Tesla did in fact recover from those lows, just as we anticipated. So if you missed it, we'll link this video up here so you can see exactly how we did it using our own deep data-driven analysis. And now that Tesla stock has moved up higher, let's take a look at the new data to see if another opportunity is setting up. As we can see here on the options time and sales tape, at first glance, nothing stands out because the rich do not always want us to know what they're doing. But beneath the surface, our system detected something unusual. So we filtered out the noise, removed all the other expiration dates, and focused in on the September 12 options. That's where we found unusual option activity that happened on August 22nd at 1:32 p.m. when a series of trades all targeted the 350 strike calls. Multiple orders came in under 175 contracts each, all around the same price of 9.80. Now, remember that options prices are shown here, and each options contract controls 100 shares of stock. And so to get the dollar value, we multiply by 100 or simply move the decimal 2 places to the right. That means each contract costs $980. And so to calculate the total cost this wealthy investor spent, we multiply the price per contract by the total number of contracts traded. And so how many contracts did they trade? Because it's not just 175 contracts that you see here. There's more than meets the eye. That's why we always take a closer look at the data to improve the accuracy of our analysis. So let's check the option chain for these September 12 options at the 350 strike calls. And we can see that 68,358 contracts were traded, spiking the volume significantly higher than the existing open interest of just 3,463 open contracts, which tells us these were mostly new contracts being opened, not existing ones being closed. We always take this extra step to verify the data at a deeper level, because many other websites and scanners don't. They report all high-volume, unusual trades without filtering out closing trades, which leads to wrong results and losses for those following unusual option activity. And that is why our deeper analysis gives us more winning trades than other websites. And in this case, it confirmed that this wealthy investor was opening new contracts because it would not be possible to close out 68,000 contracts if only 3,000 were opened previously. At most, 3,463 contracts could have been closed. So to make sure we don't overestimate the cost of this unusual trade, we take the volume of contracts traded, 68,358, and subtract the 3,463 contracts previously opened, which equals 64,895 new contracts opened. Next, we multiply this number of contracts by $980. the price we saw earlier on the options time and sales tape. And this equals a total trade size of approximately $63 million for this unusual option activity. But keep in mind, just because a trade is large does not necessarily mean it has a high probability of success. In fact, this one carries more risk than the smaller, more selective trades we share on our website. And so if you want to get access to the lower risk trades with a higher probability of profit, then go to our website. We'll put a link up here. Keep in mind that our members get early access to trades like this before anyone else, even before we share them publicly. And if you join the membership through our website instead of YouTube, you'll also receive additional trade alerts by email, giving you even more ways to profit. So if you're tired of being late and want more time to act on these opportunities, just head over to our website, where you can see in real time when and which stocks wealthy investors are trading on Wall Street, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? With that said, even though this trade carries higher risk, we still took it, but we used position sizing to manage our risk. As you can see here, we also bought these 350 strike calls and got into the same position marked as POS, which stands for our position, and the green color indicates a buy position. Because based on our deep research across multiple variables and data sets, this wealthy investor bought these 350 strike calls for about $980 each, the same price as we saw earlier on the options time and sales tape. And so when we analyze this trade, you can see here on the risk profile graph where the profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line over here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading below this zero break-even line, as the share price goes down, this trade becomes more negative, more loss. And as the share price goes up, this trade becomes more positive, more profitable, because it's going long bullish on Tesla stock. We can also confirm that by checking the options Greeks. This trade has a positive delta, which means it's positioned long and bullish. If it was a short bearish trade, we would see a negative delta instead. But keep in mind the risk with this trade. It has a negative theta, which means it loses value over time due to time decay. And that is why you can see here the purple line drops down lower to the blue line as we approach the option's expiration date. Since these options lose value through time, the break-even on this trade moves higher as time goes on. And so you can see here, even though the call options we bought have a strike price of $350, the stock needs to trade above $359 per share for this trade to be profitable at expiration. Because of this added risk, along with other factors, we only took a small position in this trade. We don't invest a lot of capital into these higher risk trades. Instead, we focus most of our capital on lower risk, higher probability of profit trades, the kind of trades we share on our website. We'll put a link to our website here where you can also learn more strategies to boost your profits. And if you missed our previous analysis on Tesla when we were buying near the lows earlier this year, we'll link that video here so you can see exactly how we did it. Take care and have a wonderful day.